Hello. The December edition of Steel Business Briefing's Global Market Outlook has just been published. This month the title is Producers Must Set Price Increases for January, but may need patience if demand is slow to improve. In this edition we look at what will be happening in the next 2 months through to the end of the year and whether the price increases, which have already been set, are in fact going to be accepted early in the new year. Looking at World Steel Association's October output figures, we see that production increased by more than 3 million tonnes that month. Output was pretty stable in most areas, but the EU 27 increased their production by double the daily rate. Looking ahead, we can see that there will be price increases. The American mills are already starting to set some up, and we can only expect that the Europeans will follow behind. These are going to be absolutely essential for the mills because raw materials, iron ore and already scrap, are going to be stronger. The key question is going to be whether demand will pick up. I'm fairly certain that it will be picking up. The only question is how long it will take as we go through the first couple of months of 2010. So flat product prices, both in the US and perhaps later in Europe, should start recovering some of the ground they've lost in the last couple of months. For long products, prices have been a bit firmer, certainly in Europe, than demand even would expect. We've got to look for those to start going up again, but they may wait until the construction season kicks in, perhaps at the end of Q1 next year. Meanwhile, in Asia, it looks as though the downturn in price in September, October in China is not much more than a blip. Still expect that there will be some weakness in the near future, but prices have already recovered again, and this has improved sentiment quite a bit out in the Asian region. Prices here are already a bit firmer, long products, billets, scrap, all moving upwards. This is very likely to continue certainly through to Chinese New Year, and then maybe we'll re-examine the position again for March. As already mentioned, probably in line with normal seasonal moves, scrap prices have started to move up. This should last for another month, maybe 2 months. Iron ore prices are holding at something like 20-25% premium to the benchmark, and this is very likely to indicate pretty much where benchmark negotiations are going to end up. Lastly, on behalf of everyone at Steel Business Briefing, just wish everyone compliments of the season and look forward to a healthy, happy and prosperous 2010.